Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today we are going to be doing technical analysis on the S&P 500 for Thursday, March 5th, 2020. And we will be using my stockcharts.com charting service. I pay for this service and I will leave a link to their site in the description box below this video. The first thing I want to point out is we were down another 3.39% today on the S&P 500, and we closed at 3023.94. What we're looking at here is a 7-day, 30-minute chart on the S&P 500. So each candlestick represents 30 minutes of trading in the S&P 500. And let's talk about this trend line to start off with. So I started this off towards the lows that we had on Friday, where we hit that intraday low of 28.55.84 right here on the S&P 500. And then I've been connecting the bottom of these candlestick bodies with this trend line, just to kind of give us an idea of what's been going on. And what we can see here is that the candle bodies on these 30-minute candles have not, up to this point, have not undercut this trend line. So that in and of itself is kind of a positive. And we had a little bit of this, the tail of this candle went about 3 o'clock this afternoon, went just for a few minutes below the trend line, but we finished up above it. And a couple other things here. We finished up above this 3,000 number, which we've been talking about for weeks. I've pointed out over the last few weeks that these round numbers, in this case 3,000, oftentimes are psychological, if nothing else, psychological support levels. And I'm going to show you on another chart here in a couple minutes why that this 3,000 number, I mean, it's just amazing how well this thing has worked. But you're going to be absolutely amazed here in a couple seconds, with a couple minutes, what I'm going to show you. But we can see that we clearly have been staying above this 3,000 level, which is a positive. And so what I'm going to do here is I'm going to draw a line now, a trend line, horizontal trend line around at that 3,000 level, because I really want to show you that and then I'm going to draw another one here at this 3110 level, okay? So starting back here last week, what we can see, and let me get us back out of here so it's easier. Okay, there we go. All right, so what we can see here is, and this would be last Wednesday, you can see that this 3110 area was acting as kind of a support area. We broke beneath this, of course, on Thursday, but you can see most of the trading, with the exception of the last half an hour of the day, was in this 3,000 to 3,100 level, okay? And then, of course, on Friday, we kind of dipped below that level and traded, down to the 28.55.84 level. And then on Monday here, on Monday the 2nd, we got back above, and the bulk of our trading has been, as you can see here, all of the trading really since about 11 o'clock or so on Monday has been above 3,000. So again, I'm just trying to look at some positive here, guys, because at least for the last 4 trading sessions, 3,000 as a closing on the 30-minute candles. Now we've dipped down, intra 30-minute periods. We've dipped down beneath this 3,000 level a few times, but the candle bodies on the 30-minute candles have not closed below 3,000 all this week. So to me, that's a positive. That's a very, very nice thing. All right, given all the volatility, we need to find some positives where we can. And you can see that even when I draw the line here at 3110, right, which gets us back here to this kind of support area for a short period of time, a few hours there, and it was acting as overhead resistance here, and then it acted as overhead resistance there, and then support for that last half an hour of trading yesterday on Wednesday the 4th, and then we gapped down today and then closed not at the absolute lows, but towards the lows of the day, but at least we are above 3,000, and actually we're above this 3020 level, and I'll go back and show you that. And any of you guys that have been following my work for the last 3 weeks, 2 to 3 weeks, you know that I've been talking about this 3,000 to 3020 level as being a key kind of area of support. So hopefully you're seeing some positives. What I'm seeing here, that again, a lot of the trading, all but Friday, right? A lot of the trading here for this last 4, 5, 6 sessions has been in the 3,000 to 3,100, clear up to 3,110 area. So if we can keep doing this, that is going to be extremely positive. probably somewhat of a miracle given how negative these markets are. But hey, if we can stay above 3,000, guys, we're going to get pretty lucky. Okay. Now, this was one of the charts we were looking at yesterday, and I promised I would bring it back up. I drew this trend line on last night's session on the 5-minute candle. So this is a 5-day chart. Each candlestick represents 5 minutes of trading in the S&P 500. We had a nice little trend going on those 5-minute candles starting at 2 o'clock on Tuesday the 3rd. And that nice little trend, but of course we gapped down at the open, and that didn't hold. And you can see that we didn't close at the absolute lows of the day, but we kind of closed near them today. So that has me a little bit concerned, but at least we didn't close at the absolute low. Now what we're looking at here is just today. So this is today's trading only, and each candlestick represents 1 minute of trading in the S&P 500. And you can see that probably around 325 or so, if you can see where my cursor's moving, we hit the lows of the day, bounced off that, and traded up and closed right here. So at least the good news is we didn't close at the lows of the session, at the absolute lows. Towards them, yes. But let me see if I can show you guys this, because I want to zoom in here, see if I can make this work. Bear with me just a couple seconds, because this is really cool, and it's going to underscore the importance of this 3,000 level that I've been talking about. Guys, hopefully you can see this, but look at this, okay? Right around that area where I was talking about, it was just about 320 or so. We bounced off. I mean, look at that. We literally bounced off of that 3,000 level. Look at that. I mean, we just kissed it. And each one of these candles represents 1 minute of trading. So I think that's cool. Yes, I'm a geek. I love this stuff. But I think that is so cool to see how important these levels are. And so from a psychological standpoint, round numbers for over a century have been known from traders and investors. Traders pointed out a century ago how important round numbers were even back then. And you can see that nothing has changed, okay? And so a lot of the trading these days is done by algorithms, but we can see that these algorithms, which are going to be programmed by humans, kicked in right there and started buying literally once we kissed that 3,000 level, okay? So it just shows you how important this stuff is, and then you can see where we close. So we kind of, had a little trend going into the close. The last minute of purchasing was negative, and we closed kind of towards the lows of the session there, but not at the absolute lows. So again, before we completely jump off of this page, this 1 day chart where each candlestick represents 1 minute of trading in the S&P 500, you can see that we closed near the lows of the session, not at the absolute low, so that's good, but we closed near the lows of the session, so that's not necessarily a good thing going into tomorrow, Friday, which oftentimes Fridays are down days in the markets, and that's been like that for quite a while, at least through my observation. And especially with there being so much negative news still out there and so many unknowns and uncertainties surrounding the coronavirus and the markets, and so many companies that are losing revenue and losing business over this, and the fear of the coronavirus, right? And keep in mind that 70% of the economy is consumer spending, and to the degree that people's fear of the unknown keeps them from spending money, that will, over the next few quarters, be negative for earnings of companies around the globe. So there could be a knock-on effect here going on, and there's so many things that we don't know. So I wouldn't get overly bold here, guys, but we've got we've got some good stuff going on. Again, I've talked about this 3,230 level on the S&P 500 for weeks. Even when we were clear up here, I was talking about this, as you guys know, and you can go back and check my charts from a couple weeks ago, my videos from a couple weeks ago, and you'll see what I'm talking about. And by the way, this is a 1 year, 1 day chart, so each candlestick represents 1 day of trading in the S&P 500. And you can see here today that we closed beneath the 200-day moving average, so that's not great, but again, bounced off the 3,000, closed above the 30-20, so those are positives, right? We have to take what we can get at this point. Those are all positives, but as I warned yesterday, these big up days are oftentimes followed by big down days, and you can see we've kind of got that pattern going on here, right? Big down day, and then we bottomed on Friday, and then big up day, big down day, big up day, big down day, and let me kind of zoom in here And let's see if we can get a 3-month chart. Okay, get that. All right, got that three-month chart here pulled up for you guys because I wanted you to see, just a little easier to see here. This is the pattern that we've got going on here. So, big up day, big down day, big up day, big down day. So, I would think for probably a little while longer, this type of volatility is probably going to be present. And a lot of times, traders are not going to want to go into a weekend with so many variables with really long positions. So I would be cautious again on Friday here tomorrow. And just, be careful here because, again, it's probably prudent to keep your powder dry rather than trying to be overly bold in this market environment. And let's pull back here before we go. Let's pull back and take a look at a longer view and get some more perspective here. But you can see that around this 3,000 to 3020 level, we're kind of hitting the peaks of where we were trading back in the summer of 2019 and then again in September, October of 2019. So there's a decent amount of support there. And you can see that as we drop below that, if we do, there's quite a bit more support through here. Now, this line I've had on this chart for a little while, this 2750, this would be important for a lot of reasons, but you can see that we tested this 2750 level back at the end of May, beginning of June. We hit it again here, which also coincided to the 200-day moving with the 200-day moving average back in March of 2019. We had quite a bit of trading at the tail end of Q4 of 2018 in this area. We had a lot of trading in June and then back in March around this area. So this 2750 level is absolutely critical. Hopefully we won't get down there, but guys, it's totally doable, right? So again, don't get too optimistic and too gutsy here. No, you need to do what you need to do, right? I can't give you advice, but it probably wouldn't be the most prudent thing to do to get overly optimistic at this point because there's just so many unknowns. Now, a worst case scenario, at least for now, would be a 100% retracement of this move that we had from the end of 2018 all the way to where we peaked a little over a week ago. So, if things get really bad, could we revisit this 2350 area? Absolutely. Absolutely. So protect yourself, stop losses, take profits, whatever. But just be careful because these are still very, very dangerous markets. I hope you enjoyed the video that you just watched. Other videos I think you might enjoy would be the fallacy of diversification, bond yields and interest rate sensitive sectors. Also, S&P 500 ETFs versus mutual funds. What are junk bonds? How to build a $1 million 401k or $1 million account, period. It doesn't matter whether it's a 401k, IRA, non-qualified account, trading account. These are all just other videos, guys, that I have out here that if you haven't watched them, I'm telling you, look at this, 3 ways to build wealth. And right now I've got 4 views on this thing. So this is a very educational video. Also, how bonds work, the rule of 72 and compounding, how much is $1 trillion? Guys, with the massive debt and deficits around the world, both in the U.S. and abroad, you've got to watch this video. How much is $1 trillion? It really puts things into perspective. It's really, really good. Also, why stocks go down, why stocks go up. What is a basis point has already been watched 114 times. Why losses matter. This will help you understand why you have to cut losses and let your winners run. So this is a super educational video as well. And then, you can get into more basic things now. How to become more successful isn't really about the stock market per se, but it will help you become more successful in life. And of course, if you want to watch one of my longer videos that is extremely educational, the Successful Investor webinar, I go into a ton of things that most people do not understand. And with my 20 plus years of financial services and 40 years now of studying success, I put a lot into that video and in all of these videos, guys. So go out here, check out some other videos. And if you haven't already done so, please subscribe. Give me a thumbs up on the video that you just watched. And I look forward to seeing you in the next video.